Hello, everyone. My name is Christopher Carmona. I'm a CPA. Today, we're going to discuss if your charitable contributions are deductible. Under the Trump Tax Cut Jobs Act, the charitable contribution has increased from 50% to 60% of your adjusted gross income, or AGI, for the next 2018 to 2025 tax years. So let's take a look and see what exactly this means and go into some detail. First thing you need to know is whether you're taking the standard deduction or if you're itemizing deductions. Standard deduction has increased to $12,000 for singles, $18,000 for head of household, and $24,000 for married filing jointly. So if your itemized deductions exceed these amounts, then your charitable contribution is going to be partially or fully deductible, depending on what your AGI is. Remember also that in the Tax Cut Jobs Act, the property taxes and the taxes you pay to a state, if you're in a state that has income taxes, you're limited to $10,000. So what we're going to look at is your medical expenses over 7.5% AGI. That was reduced from 10% to 7.5%. The $10,000 cap on your property taxes, any charitable donations that you made also go into that calculation, as well as your mortgage interest. So if all of those things add up to more than the standard deduction, 12,000, 18, or 24, depending on your filing status, then your charitable donation is going to be deductible. Also keep in mind that unreimbursed expenses for your W-2 job are no longer deductible as an itemized deduction. There was a 2% floor for AGI, but limited to 2% of your AGI, but that whole thing has now gone the way of the covered wagon, and you will be subject to those limitations. So let's look at it. Let's look at an example. John and Jill have an AGI of $200,000. They donate $20,000 to a 501c3 organization. They're allowed to deduct up to $120,000 as part of their itemized deduction. Any portion above that 120 is carried forward for up to 5 years. This is provided that, clearly they're going to itemize, because $120,000 for a married filing joint couple is above the 24,000 standard deviation. So if they had, let's say, no medical expenses were qualified over the 7.5% of, so they didn't have medical expenses over $15,000. They paid some property taxes and state taxes that was limited to $10,000. They donated $120,000, and they had some mortgage interest, let's say, of $30,000. So their itemized deductions are clearly above the standard deduction amount. But you need to keep that standard deduction in mind in order to make these charitable contributions count. One, who can I donate to? You can donate to any qualified domestic organization. There are also treaties in the IRS code with different countries that may qualify. I'm not going to get into that here. I'm specifically talking about cash to a 501c3. There are private foundations out there, and your donation is limited to 50% with some of those. If it's a non-operating foundation, I think it's 30%. And also, if you're donating appreciated property or something similar, then that's also something else we're not discussing here. But the IRS is also looking for donative intent. That means you don't expect anything in return. I'm giving this charity, Red Cross or Community First or whoever it may be, I'm giving them, and I don't expect anything in return. I also wanted to note that donations of services are not deductible. So if you price your time at $50 an hour, you volunteer for an organization, you cannot deduct, and you donate 5 hours, you cannot deduct $250 as a contribution. However, any expenses you related that are reasonable for those services are deductible. So some travel, let's say you had to travel for a church convention and you volunteered your time there, Then that travel expenses along with the meals are deductible, and the mileage, 14 cents a mile is the standard mileage for 2019. You can also deduct that mileage. So just keep that in mind. But more specifically, I just wanted to discuss cash contributions to a 501c3. What are the IRS record keeping requirements? They require a receipt for non-cash donations in all for non-cash donations, but for cash donations, it's fine to have a bank statement or receipt or something evidencing the payment. Now, if you're making a one-time donation and it's over $250, the charities are required to give you a piece of paper, or usually it comes at the end of the year saying, John, Jill, we value your contribution of $700 to donation XYZ. If you're donating a vehicle, there are separate rules for that on what's deductible. If charity uses it in their everyday use, then you can deduct the fair market value of the vehicle. If they take the vehicle and they sell it at an auction or however they dispose of it, then whatever they get for that is what you're allowed to donate. They will provide you with a 1098-C at the end of the year evidencing that. So just keep in mind, if you're given $10 in the basket every month at church, you really do want to get some evidence. So it would be better just to cut a check for $10 every month. If you have any other questions, please feel free to give me a call. My number and link are here, and I have other videos for other questions that you're more than welcome to look at. Thank you very much.